Hey, Alexa, what crap did John Hicks say this week on the radio? I'm sure I don't want to hear it, but I'm interested to find out.
Helping you solve the retirement puzzle. Welcome to The Retirement Solution with John Hicks.
Here with John Hicks, I'm Jennifer Perry, and we know a lot of you have questions about this market and how your portfolio is being affected. The best way to reach us with your questions, though, is online through our website. You can always find us there. Drop us an email at retirementsolutionradio.com. But the coronavirus sell-off continues. What a crazy couple of weeks, John.
Well, you know, it's been interesting, and usually if I've lost an hour of sleep this week,
right,
I would be a lot worse. But you know what? I'm so ready for spring. And I'm so ready to end some of this volatility in the market. But guys, I'm not going to lie to you. It's going nowhere. This volatility is here to stay.
You think?
So just for you guys that haven't paid attention out there, I'm going to do a little summarization of what life has been like in the fast lane or slow lane or losing lane or winning lane, whatever it's been.
Depending on where you are right now.
Every day's been different. But of course, if you remember, the previous week, the market had the worst drop since like 2008. We lost almost 13% in the broad market in a week. And that caused volatility, that deviation to go through the roof. But if you remember, Monday this past week, the market had the greatest one-day point gain in history. The very next day on Tuesday, the Federal Reserve said, hey, we're going to make sure that people are confident in this market. We're going to drop interest rates. And they did it. And what happened? The market ended up going down 3%, like 600 points in that day. It's nonsensical. And then since then, it's just been nothing but pandemonium and chaos. For what reasons? Well, let's be real. The coronavirus is absolutely in the United States. It's here. Now, we don't need to fear about that. It's here. And the truth is that in the United States alone, the flu, which, by the way, the COVID-19 is what they're calling it. There have been 18 other strains of this similar flu-like virus historically. This is one that's a little bit more aggressive. But it's basically like the flu, which kills Americans 30,000 to up to 80,000 people in the U.S. a year.
Every year, yeah.
So that's already bad, right? And so this one has a little bit more of an aggressive strain, and we don't currently have a vaccination. So here's the thing. I'm saying this because I want us to all don't fear what we don't know what we can, and prepare for it, okay?
Yeah.
So here's the point. And so when the Fed came out and said, hey, we're going to reduce rates, the market loved it at first. It was up almost 400 points at one point in time, but then it realized, hold on, they're doing this as an emergency meeting. What does the Fed know that we don't know?
I think that was the terminology that threw everyone off. You know, when you say emergency, we think it's an emergency, right?
Correct, because in 2 weeks, the Fed is actually having their meeting. And what a lot of people said in the beginning, like they cheered on the Fed, okay, this is a surprise, this is a good boost to the market, show confidence, you know, let people understand, yes, it's going to disrupt the U.S. Why? Because maybe the Dollar Tree can't get some of those items to stock on their shelves. Maybe Apple can't get some of those phones in that they can sell for $1,600, right? Maybe a lot of the things that our parts manufacturers for our automotives or our HVAC or our heating things, they can't get some of those parts. And that is absolutely going to have an issue, not even including all the airlines and things like that.
Right.
So typically what happens is when these events happen, right now, all the reports that have come out in the last week have been very positive. Home starts are up. Consumer confidence is up. No, this is old information. So what now the market's looking at is saying, oh, wow, this is really going to be disruptive. The next quarter's information might be kind of crappy.
Right.
This might be kind of bad. And what is that going to do to the market? Now, here's why I'm giving you and painting the picture, but it kind of doesn't matter. Okay. The reason it doesn't matter is because this show is not for people that are day traders. This show that we're doing isn't for people that are just willy-nilly investors. This is for all of us who at one point in time want to quit working, we want to retire, and we want to be happy. So when you think about that, every one of our clientele are long-term investors. So we're already not worried about these short-term effects. Now, are we prepping for them?
Absolutely.
Dang straight we are. But we're not doing it by being fearful of what's happening. As a matter of fact, our models changed 3 times in the past 2 weeks. It didn't willy-nilly get everyone out, but it made very careful considerations to reduce downside risk. That's all it did. Very simple maneuvers. But amazingly enough, what it all boils down to, if you know your maximum drawdown in your portfolio, and if you know it's, let's say, 8% is the worst you could have gone down, Well, heck, if you were market-based the week before, you lost 13 in a week. In most of our portfolios, the average client lost less than a fifth of what the market went down.
Wow.
But it all depends on how they're structured. Mm-hmm. Do they have the right investments in stocks and bonds? Do they have the right investments in completely safe assets? Do they have strategies that are market neutral? Do they have any gold? Do they have any insured accounts that can't lose money no matter what happens? Are they buffering or hedging the downside? Every one of us should do that. Every single one of us, because here's the big thing, guys. Unfortunately, the casualties of this virus have not even been really reported yet. That's when you're going to see the real broad spread panic start to go across the markets. If you're prepared for that, you would have already prepped long before now. And that's the big point of the puzzle. So if we want to make sure we're doing the right thing, how much money do you currently have at risk? Realistically, I don't want you to guess about what your portfolio is going to go down. Those that guess often guess wrong.
Yes.
What I want you to know is the worst thing that can happen, and be prepared for that to get really close to touching that number. See, guys, if you know this, do you understand how much power there is in knowing? You don't have to change your design. You can sleep at night. If you're already retired, you can just go out and live your life. You can still go to Texas Roadhouse. You can still go out to Logan's. You can still do the early bird special wherever you want. You can do anything you want. Why? Because you know the worst case scenario, and that is something you can live with. When you don't have that right now, you may be a little nervous. You may be freaked out. You can avoid all that, but you have to know what your worst case scenario is first. And guys, if you don't want to lose anything from here, nothing at all, there are options where you can have zero risk. Some of them are insured by banks.
Okay.
Bank CDs. I mean, that's a big one. You can do equity linked CDs where you can get 30 to 50% of the upside of the market, but zero downside. FDIC insured. Such simple things that we can do. So if you get 50% of the market last year, Jennifer, market was up 26%. Is 13% for guaranteed safe money FDIC insured okay?
Hey, that sounds pretty good,
That's
especially
pretty good
after
in my
these
book.
last couple of weeks. Yes.
It's pretty good in my book. And if the market falls apart, you can always pull your money right out of that CD and go buy Google or Amazon or Microsoft or Apple or whatever you want on the super low costs and make out like a bandit long term. But the point of the matter is this is going to be a big deal, and you better have a gut check before it happens. If the last couple of weeks have already ruffled your feathers, you really need to have a professional look at your situation. If your guy doesn't give you a current maximum drawdown, that's not a true professional in my book. You need to seek one of those guys out, preferably fiduciary only when it comes to securities. That way you know you're not going to get bias. You're going to get a plan that will work even when, not if, when the stuff starts really hitting the fan.
Have questions for John? Drop us an email at retirementsolutionradio.com.
Financial professionals are not licensed in all 50 states. To find out if John Hicks is licensed in your state, please call 502-690-5635. J. Hagan Capital Inc. is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through John Hicks, Kentucky Insurance License number 998827.